Welcome everyone. Today we will be learning another very important concepts in finance, how to calculate the installments and the loan. So here we are going to understand the key terminologies, the different types of terminologies we need to understand, we need to memorize these formulas, amount finance, finance charges, total finance charges, installment, total payment on loan and deferred payment prices. So we'll see it another slides. This is the explanation. The types of loan where a borrower receives a lump sum of money from the lender. So whenever we borrow a money, say for example, if I take a loan from a bank 10,000, so this 10,000, the bank will pay me the entire amount 10,000. So I will get 10,000 from the bank. It's a lump sum amount which I will be receiving from the bank. But the repayment of loan is in fixed regular installment over a set period of time, typically monthly. So if I have taken a loan for 5 years, that means I have to pay in 60 months. 5 years means for 1 year there are 12 months. So 12 multiplied by 5, 60 months. And every month I will be paying a fixed amount. Say for example, I will be paying 200 reals, 200 every month. So I will be paying 200 every month for 60 months. This is what we call it as a repayment. It can be secured or unsecured. Means I have to provide some security. Like the bank will take my house as a security. If I don't pay the loan, the bank will sell the house and get the money. The terms and condition on installments loan, it varies, it changes depending on the lenders. Different banks give different policies. And examples of installment loans includes auto loans, mortgage, personal loans and student loans. So these are the key terminologies which we have to understand, which we have to memorize for the calculations, which we will be doing it in the next slides. So the first terminology or the first formula we need to remember is amount finance. Amount finance is what? It is nothing but the principal amount or the amount of loan. The second one is the finance charge. Finance charge is the interest rate or the amount of interest which is charged on the loan. The next one is total finance charge. Total finance charge means the total amount of interest paid. This can be calculated using the formula. So the formula for total finance charge is total of all installment payments minus amount finance. Then we have installments. Installments, remember installments includes principal amount plus interest both. And total payment of loan, how do we calculate? Amount finance plus total finance charges. And then the last we will be doing it deferred payment price. Deferred payment price are the total of all installments plus down payment, or we can solve it in different way, purchase price plus total finance charges. So with the help of these terminologies and the formulas, we will be calculating in this table. So in the first column, the purchase price of the product is given, which is 22,500, and the down payment is 6,000. So now we have to calculate what is the amount finance. Amount finance means the amount of loan taken. So here we will see the amount finance. How do we calculate? Purchase price is how much? 22,000. So my purchase price is 22,500. How do we calculate? 22,500 minus 6,000. So 22,500 minus 6,000, it will come to, how do we calculate total amount finance? Purchase price of the product minus down payment, that means 22,500 minus 6,000. So it will come to 16,500. Remember, how do you calculate? 22,500 minus 6,000, it will come to 16,500. 22,000 minus 6,000. Remember, minus 6,000. Then here it is given number of monthly payments. How many months it is paid? 60 months. And amount of monthly payment is 310. So we need to calculate total monthly payment. How do we calculate total monthly payment? 60 multiply by 310. So 60 multiply by 310. What is the total monthly payment? It will come to 18,600. 18,600. Understood? So 60 multiplied by 310, it will come to 18,600. Now we will calculate what is the total finance charges. Total finance charges is how much? How do we calculate? Total monthly payments, that is 18,600 minus amount finance, which is 16,500. So 18,600 minus 16,500 will be my total finance charges. So 18,600 minus 16,500, it will come to 2,100. Right? After that, we will calculate APR. Remember, in my previous video, I have explained you APR, how to calculate APR. So here I will write it down for your understanding. APR is equal to total cost of credit. What is my total cost of credit? That is my total finance charges. My total cost of credit is 2,100. Remember the formula of APR. You can watch my previous video. So total cost of credit, which is 2,100, divided by we will divide it by loan amount. What is the loan amount? The amount finance, which is 16,500. Is 16,500. Okay, divide by term. 60 months means 5 years. Divide by 5, bracket close. Multiply by 1, multiply by 100. This is the formula of APR. You need to watch my previous video. Okay, and when you take it on the calculator, you will get the answer 2.55%. So you write here APR is what? 2.55. Right, it is 2.55%. Then deferred payment price. How do we calculate the deferred payment price? Remember the formula: purchase price, which is 22,500. Purchase price 22,500 plus total finance charges. Look here. Purchase price 22,500. This one plus my total finance charges, which is 2,100. Both I will add it here. So you will get the total amount, deferred payment price, which will come to 24,600. 24,600. This is how we complete the table. Similarly, we will do the second table. Now you can see 249. This is the purchase price. 249 minus 50, which is down payment. So my amount finance will be 199. Then same way, total monthly payment is how much? Number of monthly payment is 15, multiply by 15.75 multiply. So the answer which we will be getting it is 236.25. 236.25. Then total finance charges, as I told you before, total finance charges, how do you calculate? 236.25 minus 199. 236.25 minus 199. So here you will get 37.25. 37.25. Right? Again we will calculate APR in the same manner which we have done here. APR is equal to total cost of credit. How much is my total cost of credit? 37.25 divided by loan amount. How much loan was taken? 199 divided by term 15 months, means 15 divided by 12, it will come to 1.25. Bracket close, multiply by 1, multiply by 100. So the answer which we will be getting it is 14.97%. So here we will write APR is 14 point. So it is 14.97. Right, so we'll write it down, 14.97. And then deferred payment price is how much? How do we calculate? Purchase price plus total finance charges. That means 249 plus 37.25. So it will come to 286.25. So this is how we calculate this table. I hope you understood. Now we will take another question. Just pay attention. Installment loan. Adil bought Land Rover for 36,500. He made a down payment of 12,000 and paid 450 monthly for 60 months. You are required to calculate the following. A. What is A? Total amount finance. So now we will write it here. This is our A. Total amount finance. Total amount finance. Total amount finance, how do we calculate? purchase price minus down payment. So what is the purchase price? 36,500 minus down payment. He purchased the Land Rover for 36,500, but 12,000 he made a down payment, means he paid it from his pocket. So 12,000 minus. So what will be the amount? The total amount of loan which is taken by Adil or the amount financed is 24,500. Okay. Now the second one, B, is total finance charges. So we will write here total finance charge. How do we calculate total finance charge? Total of all installments minus amount finance. So how much installment he has paid? See here, monthly how much he is paying? 450. Okay, multiply by how many months? He is paying it for 60 months. So this is the total of all installment. Remember the formula which I have explained you. I told you to remember in the first slide when I started this video. So 450 multiply by 60 and then minus the amount finance. How much amount he has financed? Means the loan he has taken is for 24,000. Amount finance is 24,500. So here it will come how much? 450 multiplied by 60 will come to 27,000 minus 24,500. It will come to 2,500. So this is the finance charges. Now the third one, that is C. C is what? APR. Remember the formula of APR. So the formula for APR is finance charges 2,500 divided by loan taken, means amount finance. How much amount he has taken? See, A we have calculated in A, 24,500 divided by term. How much time? 60 months. 60 months means 5 years. Bracket close. Multiply by 1, multiply by 100. APR means it is annual percentage rate. So it will come in percentage. So when you calculate on the calculator, it will come to 2.04%. Now the last one is deferred payment price. I will write here deferred payment price. Remember, we have done before purchase price plus finance charges. So how much is the purchase price? He purchases for 36,500 plus how much is the finance charges which he has paid? 2,500. So what is the deferred price? It will come to 39,000. Okay, this is how we calculate the installment amount. Okay, if you like it, just share it with your friends so that they can also take the advantage. In the next video, I'll explain you how to calculate the EMIs.